Ever pondered why Bitcoin's value appears to skyrocket abruptly? Scratching your head over how one Bitcoin might be worth more than a brand new, top-of-the-line car? Well, it's not sorcery, but rather the workings of economics. Bitcoin's recent surge has fueled several elements. Most notably, though, is the fundamental economic principle of supply and demand. As more people become aware of and interested in Bitcoin, demand for this digital currency rises. But here's the catch. The supply of Bitcoin is capped. Unlike traditional currency, which can be printed into demand, Bitcoin has a maximum limit of about 21 million coins. This scarcity factor, combined with a rising demand, creates an upward pressure the price, hence its significant value. So, as more people jump on the Bitcoin bandwagon, the balance between supply and demand shifts, driving the price even higher. A significant catalyst propelling Bitcoin's surge is the advent of Bitcoin ETFs. For the uninitiated, an ETF, or exchange-traded fund, is a type of investment fund and exchange-traded product that is bought and sold on stock exchanges, much like individual stocks. Bitcoin ETFs present a unique proposition to investors. They provide the opportunity to gain exposure to Bitcoin without the need to directly purchase and store the cryptocurrency themselves. But how exactly do Bitcoin ETFs operate? As with other ETFs, they track an underlying asset, in this case, Bitcoin, and are designed to mirror its performance. Each share of a Bitcoin ETF represents a fixed amount of the cryptocurrency. When an investor shares in a Bitcoin ETF, they are essentially buying a piece of the fund's total Bitcoin holdings. However, the investor does not own the Bitcoin directly. Instead, the ETF provider takes on the responsibility for the safe storage and security of the physical Bitcoin. Bitcoin ETFs have a significant impact on the Bitcoin market itself. They offer a more accessible entry point for everyday investors, who might otherwise be daunted by the prospect of buying and storing Bitcoin themselves. This can lead to an increased demand for Bitcoin. As more ETFs buy up Bitcoin to back their funds, it can drive up the price, creating a positive cycle of increasing demand and price. This is a significant reason for Bitcoin's price surge in the recent past. Apart from these elements, a plethora of other factors have worked in tandem to fuel the recent bull run of Bitcoin. These encompass the widened acceptance of Bitcoin by multinationals and leading financial institutions, creating an environment where digital assets are seen as a legitimate form of. Then there's the mounting interest in Bitcoin as a hedge against inflation, especially in an era where traditional currencies are subjected to extreme volatility due to geopolitical events and economic uncertainties. Lastly, there's the continuous and growing popularity of Bitcoin among tech-savvy millennials. This demographic is increasingly exploring and investing in cryptocurrencies, enticed by Bitcoin's decentralized nature and potential for high returns. They view Bitcoin as a preferred investment vehicle, further propelling its surge. So, to conclude, Bitcoin's recent ascent is not a flash in the pan or a financial bubble. It's the byproduct of an ideal convergence of escalating demand, restricted supply, and significant evolutions in how Bitcoin is traded. Now let's delve a bit deeper into the future of Bitcoin. It's clear Bitcoin is here to stay, and its potential impact on the world of cryptocurrency is immense. It's not just transforming digital transactions, but also shaping the financial landscape on a global scale. Who knows what the future holds for Bitcoin? Its potentiality is vast. Perhaps one day it will become commonplace like cash or credit cards, changing the way people perceive money and transactions. Anticipating this, many countries are already working towards regulation and acceptance of cryptocurrencies. Bitcoin's blockchain technology could also not just financial transactions but also areas like voting systems, contract law, and personal identification. Until such a day comes, it's certainly beneficial to keep close watch on this thrilling and constantly evolving market. Whether you're a seasoned investor or someone just exploring the world of cryptocurrency, Bitcoin always has something novel and enlightening to offer. It's not just about investment, it's about the future of finance and technology.